Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 17th, 2010. Well, folks, the markets are hovering on the flat to slightly lower level today across the board, as again, we've seen some really Options X activity going on. Now, you might say to yourself, well, what is Options X activity? I will go in depth here and explain exactly what I'm talking about. We had horrendous news today. There was absolutely horrendous news in the markets economically. We had jobless claims this morning coming out at 472,000. That is far above what the consensus estimate was, which was around 450,000. Also, the market continues to look for a move below 450,000 towards that 400,000 level, and we're just not getting it. And that's telling us that joblessness across the U.S. will continue to be high. It tells you that there's no new jobs really being created out there that's going to outweigh the jobs being lost. The unemployment rate is going to stay near 10%, and that's not what the market wanted to hear. Initially, the futures sold off, but they rebounded. Why? Because in general, the euro was a little bit higher on the day overall. Now, at 10 o'clock today, what did we get? Now, you can see, again, the market's hovering right here on the flat line. This is where we closed yesterday, and this is where we are currently sitting right here, down about 20 cents on the SPY. But at 10 o'clock this morning, we then got a new economic number out. Actually, two. We got leading indicators. Leading indicators also came in weaker than expected at 0.4% after last month's expected number of 0.5. So another negative out there. Now, it wasn't a huge negative on the leading indicators, but still a negative nonetheless, as we missed the estimates that the analysts had foreseen. The big kicker was this one, Philly Fed. Philly Fed coming in at 8. Yes, that's correct, at 8. Last month was 24. Expectations, I believe, were 20 on that, and that is a huge miss, folks. I mean, just think, expectations are 20 and you get 8. There's a huge difference there. Again, market sold off a little bit. You can see again right here the market selling off on that. But remember, Options X. Options X is very key here to understand. When you have an options expiration, folks, what's going on essentially is that the institutions over the past month or two have sold a lot of puts. Why? Because the market's been falling. So all the retail investors said, oh, I better protect myself to the downside, or this market looks like it's going to continue to crash, so I'm going to buy puts. Well, they're buying the puts from the institutions, which in turn are giving the institutions a premium. Now, as long as those puts expire worthless, the institution gets that premium as a pure profit. So that's the goal of the institution. The institution that's selling these puts on the market, essentially, which is the ones that are being bought more over the last month or so, that's what they want to expire worthless. Now, the markets had been crumbling over the last couple of weeks, right? I mean, even till mid last week, we saw the markets just getting crushed. So you have to figure that a lot of these puts are in the money. What do the institutions want to do? They want to drive the market up and not allow these puts to expire in the money. In fact, push the market up enough where these puts expire worthless. Therefore, they're keeping the premium. All right, having said that, what do we know about the market going into this Options X Friday over the last week or so? Look at that. So again, everyone who was buying puts over the last month or so now is looking at this and saying, wait a minute, my puts are going to expire worthless. The institutions are saying, yes. This means we're going to get some nice profits here. All in all, that's the way it comes out. And we are talking about a very nice little move, but it's on the back of institutions. So when you get economic news that's so negative today, like we're seeing today, the markets aren't falling, and it's very easy to understand why. The institutions do not want to let this market fall so they can maximize profit. The volume is light enough this week. We've talked about very light volume of about 200 million on the SPY, and that's enough to let the institutions really manipulate the market and keep it up higher. All right, so that's a little rundown of what I think is going on. Last night in the Research Center video, I went into in-depth talking about this, and I said, overall, folks, you really don't expect the market to dump out here on a Thursday before Options X Friday. Now, Friday towards the end of the day is a possibility, or next Monday or Tuesday, yes, but not really before then, because these institutions do not want to pay off the puts in this market and really cut into their profits, or actually possibly even lose money. If the market was really collapsing, all those puts would be being paid off in massive amounts. All right, so I hope you understand what we're talking about there, and we'll see again how that reflects over the course of the rest of the day. The markets, by all means, are not up on the day, but they're just not falling much. The economic news, very negative. You would have thought it would be a down 150 to 200 point day on the Dow. The Dow's down about 20 points right now. S&P is down $1.75, and the NASDAQ is down about 1 point. Now, I just put out a new alert on a small cap oil stock in the hot charts and alerts. That is out there now. It looks like it's already started to run. I discovered this one after looking over certain charts like this. If you look at the BDCO chart, check this out. The daily chart of BDCO last couple days ran over about 200%. Another stock here today, PDO, up $1.32 just a couple days ago. 2 days ago, this stock was trading at $4.40. It is now at $6.60 2 days later. So these little oil stocks that are in the Gulf region are really running. And again, I just added one to the alerts on the hot charts and alerts. You want to make sure you see this one because this is a big one, folks. I think ultimately, if it gets started, it could go from basically a 96-cent entry here that I took to possibly $1.25 to $1.50 in a very short amount of time. Easily a 50% possible gainer if it starts to really get picked up by the hedge funds, which I think it may start to do because these other ones are running so much. So that's a good one as well. And again, if you want that, you got to log into the hot charts and alerts and view it. Now, let's go over a couple other things. The spiders, again, on the intraday, you can see, again, on that negative news this morning, we saw a little bit of a selling. We saw a minor gap up, and as soon as that happened, we got that economic news. The market tanked back down. Look at where we went. We went perfectly to a double bottom from yesterday. The double bottom from yesterday held. The market's bounced off of it, came to the 20, consolidated, went up again. We came just within the highs of the day. The highs of the day up here. We came just underneath that, and then ultimately sold off here into the 20 moving average. Now, it's going to be interesting to see the end of the day. Are we going to start selling back to the lows of the day? It's a possibility. Even then, the markets would not be down that much. You're just not expecting a basic 200 to 300 point down day before options X is over because, again, these institutions want to collect the maximum amounts of profits that they can, and by doing so, they need to keep this market really from falling apart until tomorrow. All right, so that's my thinking process anyways. Google is down, but Apple continues to be so strong. AAPL, check this out, folks. What a move on Apple. Hit a new 52-week new all-time high today on that chart, and that continues to look very nice across the board. All right, so that's Apple. Goldman Sachs is hovering on the flat line. Goldman was having a very good day earlier, then rolled over, now bouncing back, but meeting a little bit of resistance. Goldman Sachs and the financials must participate if the markets are going to get any sort of bid. They have to, folks. It's that simple. All right, you got to look for that. We're going to continue to look for that. JP Morgan in the afternoon session is actually near the lows of the day, so you're seeing that JP Morgan is not participating today, which tells us the markets will have a tough time rallying to the positive side. Again, they're down about 26, check that, down about 20 cents on the SPY right now. Here's the SPY chart. You can see it's bouncing beautifully off of the 20 moving average. Now, a couple other things to look at here, folks. First of all, tech-wise, markets are basically flat. NASDAQ is down about 3 points now. A couple leaders, as I mentioned, Apple Computer's really the big leader across the board. I'm just looking across the board and seeing what else is moving here. The small caps are still in play, although, again, they're a little on the quiet side today, aside from a couple of these small cap oils, which I do think that's the next place to be honest, guys. The small cap oils definitely are the next place to be, the ones that haven't run yet. You don't want to be looking at a PDO that's already run or a BDCO, but there are a few other small cap oil plays that have a good potential of running. All right. Other than that, scanning through, I don't see a whole lot else. Remember, options X is tomorrow. Really, no economic news tomorrow. I expect tomorrow to be generally a light trading day, unless we get news out of Europe overnight, which could crush the euro. If that did happen, then obviously we'd have a heavy day tomorrow. Aside from that, Fridays now, as we enter the summer months, are going to be a little more on the quiet side and expected to be such. All right. So that's what I'm seeing here, folks. That's all for today. Again, join the Hot Charts and Alerts, which is part of the Research Center, so you can join any part of the Research Center and get the Hot Charts and Alerts included. Everything underneath the Research Center is included. And again, these plays let us continue to make some money in this market. Just continue to pile on those profits. Take care, folks.